So are you guys all business majors then? Raise your hand if you're not a business major. Oh, okay. So we got a few. All right, what do we got?
I'm gonna share this screen first.
Okay.
That might help.
I want to go for dumpster.
Oh, cool. Oh, very nice. Anyone else? Oh, yeah.
Is that better?
Nice.
Thank you.
We have a lobbyist. We had a lobbyist go to Congress to help out with the DeFi bill. That was pretty cool. He had no, so it was part of the infrastructure bill, the DeFi regulations that just came in. And I think he didn't have much luck changing the language there, but as with national politics, it's largely out of your control. So it's nice to see that, this is an altcoin, but we can still make impacts just by taking advantage of people's natural talents. So are we good to go?
Good to go.
All right. Can I take your space?
Absolutely.
All right. Because it will be easier for me to put my thing down and stare at the screen. So I have prepared a presentation today called I'm Sorry You Have to Learn About Bitcoin. Because throughout your life, and probably already, you've heard hundreds of explanations, and they're all insufficient in some way or other. And generally, that's going to be the case, because unless you have like an extremely technical mind or you spend a lot of time reading about it, the crux of how the blockchain works is going to escape you. And that's all right. So what I have prepared is like a crash course for if you are curious and you are willing to pay attention, you will understand intuitively what's happening with blockchain technologies. And at the end of it, you're going to forget most of it. And that's okay. But you will at least have trust in quote unquote the system and have some idea of how this all progresses forward in a way that we can send virtual currencies to each other and like believe that they actually got there. So feel free to interrupt me at any time. It's better that we understand one thing in great detail than many things poorly. And did I forget anything? No. Nope, we're good. So let's get started. So our outline is pretty basic. So our cryptocurrency basics, we'll go through one pretty extended metaphor of how a blockchain works. And then I think most salient to you guys, it'll be how this manifests as investment opportunities, like why someone would actually pay real dollars to participate in this system. And so, I mean, this is just an example of the memes. So, our altcoin has lots of memes and they're fun to keep track of. But is it on Coinbase? It's going to be a long time before we're on Coinbase. So the first thing we need to do is delineate between what's a blockchain and what's a cryptocurrency. So a blockchain is to computer scientists a fairly poor data structure. So basically, well, I'm going to trip over that a lot. So the blockchain is just data that points to a previous block of data. It's a linked list, right? And in each block of the list, you write the either memory address or just the number of the previous block. And all that gets you is you can traverse it in reverse order, right? You can go right to left, not left to right, which is not very exciting. If you wanted to make your own blockchain, you could, every time you get a grocery store receipt, you could write on it the number of the previous grocery store receipt. You're like, why would I do that? Well, I don't know, maybe when tax time comes around, you want to just go through that list with an iterative program that calculates all of your taxes. That's about all we can think of it for. So that's just what a base blockchain is. A cryptocurrency is a distributed blockchain. We give it to everybody with a very specific set of constraints and algorithms that allow us to exchange virtual dollars. And I want to be clear here. When I say virtual currency, it's easiest for you to think about this as it's all the money just inside the virtual system. It's like the monopoly money, the play money, right? So if you start thinking about like why people are paying dollars, you're going to get confused. So we're just going to say we're staying inside the system for virtual currencies. And some typical examples, we have Bitcoin, Ethereum, BNB, Litecoin, Doge, whatever. And so we're going to understand how those function on blockchain. Any questions about this? All right, it's good. So cryptocurrency solves the problem of how do I send you $10 on the internet and guarantee that it's both secure and trustless. So secure is not a very hard problem for modern day technology. Trustless is. So trustless means I don't have to ask PayPal how many dollars I have. It means I don't have to ask Chase Bank, right? there is some way that we can send each other dollars and the entire crowd can guarantee that those dollars were received in a way that we can all verify as true. And so the typical example is like, I'm in my apartment, there's a refrigerator with a whiteboard on it. And instead of actually handing each other dollars when we buy a cup of coffee, I'll just go to the whiteboard and I'll write, I got you a cup of coffee, right? And so we can exchange value in this way, and we don't actually have to exchange the dollars themselves. And so, is this cutting out weird when I walk past it? No, okay. And so, a very simple example is like, John owes Steve $5. So we can put either our debts or our transfers up there. If I buy you coffee, you would then owe me $5 or however much the coffee costs. And so you could keep a record of the transactions. And so, Casey owes Steve $10, Sue owes John $22. As long as everybody's, playing fair and not erasing transactions or changing the dollar amounts, you would then have a public ledger. Anybody in our apartment could walk up to the ledger, they could see exactly how much money they have left in the system, right? They could say, oh, I'm all out, or, oh, I still have $10 because I got it from that person, I can then spend it later. Right, so this is the first instance of a public ledger. And then the cryptocurrency is the idea, how can we take this and instead of just our apartment, we take it to the entire apartment block, and then we take it to every apartment block in a way that we can all participate. But there are a couple concerns. And so one of them is we want it to be publicly inspectable. So, anybody has to be able to come into our apartment and look at the whiteboard, check their balance. We need verifiable signatures so that people can't write, you owe me $1 million, right? So we'll say only the debts that I write are the ones that are going to be considered true. So I will sign them with my name. And that's not hard. We'll just say everybody knows my signature, right? Say if I write, scribble Joseph up there, everyone could say, that looks like Joseph's previous signatures, or it doesn't. And then we'll add the caveats that we're not going to erase transactions and we're not going to copy them. Because if I sign my name, you could presumably copy my transaction, right? You can just like copy paste it a million times and be like, well, you gave me $5 100 times, whatever. But we're just going to throw that out of time. So at this point, we have like an honor system and a couple of rules, but we're going to extend it to see how we can automate this with a computer system. Any questions so far? Good. Don't worry, it'll get worse. If we want to make a blockchain out of this, sorry if that goes off. So if we want to make a blockchain out of this, we're going to run out of space on the whiteboard. So what we're going to do is we're going to take a picture of every whiteboard list of transactions, and we're going to send it on like a text message chain to everyone. Right, and in that way, we'll just reference what the previous whiteboard was, and we have a blockchain. Right now, we're sending it around. It's a publicly verifiable ledger. As long as we all know what my signature is, and everyone else's signatures is, there's going to be no problems. So we're going to find out how computers do that every day. Good so far? All right. Just wait. Too far. All right. So there are three concepts that we need to understand this intuitively. One of them is the hash function. One of them is public-private key pairs. And the last is proof of work. And proof of work is what you're going to read about 1,000 times, and it's going to be terrible every time you read about it. So if you've heard of a hash function, raise your hand. All right. Which hash function have you heard of? Anyone in particular? Yeah, okay, great. Public-private key pairs. Invented at MIT, RSA. Yep, so that is like critical to security, but for us, it'll be a simple concept to understand. And proof of work. All right, so we got a few people. That's good. That one we'll go through a demo for, and it'll be fun. So the hash function is a simple idea. You turn data into, I'm gonna grab this guy. You turn data into a fixed length set of ones and zeros, which we interpret as a number. And here's how I call it a string. A string just means, some data. It just has a ASCII representation. And so the idea with the hash function, let me give you a couple examples, and then we'll define it more precisely. If I wanted to take Shakespeare's Othello and run it through a hash function, I would get out some string, and this is just a number. It's ones and zeros that we interpret as a hexadecimal number. Hexadecimal numbers are native for the blockchain for whatever reason. So if you took all of your spring break photos and you hashed them, it would turn into yet another number, but the key to us is that all of these numbers are the same length, right? And also it is very easy to go from the data to the hash function, but it is very hard to go from the hash function to the data. And so these are one-way functions. And I'll show you how that works in a minute. So we could then take all of our records of transactions and we could turn them into a hash, right? The thing is, we all know what the hash function is. It's the SHA-3 hash. But if you ended up with this, you could not actually tell which of your original data you came from. I'll tell you how that works in the next slide. The other thing I wanted to mention, oh yeah, if you flip one bit in, say, Shakespeare's Othello, if you add an extra space or you delete a line, the hash value will look very, very different. It will not just be like, that's a 4 instead of a 3. It'll be wildly different. And so in this way, we can verify data integrity because we can take a hash value of all of our transactions and we can compare it with everybody else's hash value of the same transactions. And if they disagree, we know someone's lying, right? Somebody has submitted a false transaction. And so in that way, we get at like the first step towards publicly verifiable data. So the way the hash function works, it's a one-way mathematical function. They have their own field in mathematics. It's very well studied. A lot of good work there. But fundamentally, it destroys information. It doesn't have to destroy like the data in Othello, but it destroys information in the Shannon entropy sense. So this is like a circuit diagram. It's very complicated. They're all very complicated looking. But the key to us is, in computers is that it's easy to go forward. And it's very hard to go backwards. So computationally, it runs forward, in constant time. So, maybe a few milliseconds. And backwards, if you wanted to back calculate it, it would take you more than, the age of the universe to run it on your desktop. So it's a very hard thing to do. And so the example that I'll give you is, imagine this is your starting data. It's a bunch of ones and zeros. A simple hash function would shift left and the first 0, 1 would fall off. Like you wouldn't know what that is anymore. You'd have some blank data there. You would then shift back right by 2, and the first two bits would not be known, right? So we have a fixed length number at the end of it, and we can do that with any string. Like we can just shift left, shift right. But the computer, if you started here, would have to guess what the first 2 numbers are, right? And so your hash function does this in all kinds of crazy ways. It like multiplies by prime numbers. It shifts around, it flips them, it XORs it with itself. And so in that way, the number you get at the end, is it BAFF7D4 or whatever, it has destroyed some data, but it is still unique to the record of transactions, right? And so it's also designed in a way, of course, that if you flipped one bit, the hash function would be very different. Are we good so far? All right, bringing it back to the whiteboard. It allows us to see if anybody has altered the data. If somebody's like sending you fake transactions to try and get you to buy them cups of coffee, that's really all it is. It's like we're all using the same function. If Joe over here tries to send me fake transactions, I'll just run the hash and ask, what's your name?
Hobby.
What?
Spanish, it's hobby.
Hobby?
Yeah.
Okay, I'll ask Hobby, did you get the same thing? And he'll be like, no. I'll be like, all right, well, one of them is lying. But then I can ask the whole crowd the same question, just take the most popular one. So that's step 1. Somebody asked me something about a hash function. Hey, did you already know all of this?
I mean, I'm learning too, man. I hook you up, man.
All right.
So one of the questions I have is, is there a limitation for how big the data can be?
There is no limitation. The time to compute forward would be a little longer, but again, to the computer, it is not significantly longer.
Okay.
There a few flash drive?
Hey, fucking couple more?
Yeah, cool. Any other questions? Yes.
I'm sorry, this is possible. Could you explain this?
Yeah, sure. So the idea is that we can take all of these transactions, they're just data to the computer, right? They're ones and zeros. We can run it through a hash function, and then it will give us a unique number, which depends only on this exact data. So if you changed Sue owes John to $21, this would be very different. Right?
Every transaction has a unique data.
Yeah. Yes.
I'm saying that in all these hash functions, I think they're either Bitcoin or Ethereum addresses, I forgot, but why do they all start with 0x?
Right. That's a like a computer sciencey nomenclature. It helps us understand that we're talking about hexadecimal numbers or hexadecimal representation of the data itself. Yeah. Usually you'll notice private keys do not start with that, even though they are hex number. It's just one of those things. Yes.
So how many iterations exist for each trillion?
What do you mean, like possible guesses?
Sure.
Yeah. We're looking at like power, like 10 to the 80 kind of thing. And that would be just for like, sorry, this length would be like 10 to the 80. If you go to the actual Bitcoin, string length, it would be more. So it becomes completely infeasible for guessing. Yes.
Are they totally secure in terms of, can someone who controls hash functions lie about that?
Yeah, so someone could feed you like a fake hash function, and if your computer doesn't pick up on that, then yeah, they could bug the whole system for you. That was the thing that I'm forgetting the name of it, but one of our cryptography methods was weakened because if you are researching, the thing is like the hash function itself, it's the subject of research. Like, nobody just can slam one of these out. You got to research like the edges, the graphical representations, make sure that it's secure, but you can't do a foolproof because again, you have to calculate like the entire set of domains that are output on it. And so what happens if you wanted to, like, I don't know, do code breaking in another country, is you would go to their researchers and you would say, well, I'm just going to substitute this with a number that I've already pre-calculated most of it for. So like, I'm keeping up with your research and I'm going to say you should use a 7 there instead of a 13. And in that way you can weaken these functions. And I got one of ours like dropped out of the NIST, National Institute of Standards and Technologies, because it was too weak, right? It was SHA-1 and it was just too weak. And so that does happen. Yes.
Is like a tree, binary tree data structure
The hash itself, I think, is just like a big string. Yeah. I know that you could use binary trees in the generation of it. Yeah. No. Okay, cool. So that's hash functions. That'll come around at the end. The next step is public-private key pairs, which are, again, its own field of mathematics, which are lots of fun to study. It's elliptic curves or elliptic curve functions. It's loosely based on ellipses, very loosely. But the thing that for us is that they are generated in pairs. So there's a public key and a private key, and they're aptly named because you give your public key to everybody and you keep your private key to yourself, right? And the idea is, if I broadcast my public key, you can encrypt data with it and send it to me that other people cannot decrypt without the private key, right? So that's pretty powerful. It's like I can stamp my name on the internet and I could, give it to you. And if you wanted to give me a secure transaction, you would encrypt it with public key, and I'm the only one who can figure out what you said at that point. But they have another unique property, is that you can sign data with your private key. Okay, so if I sign data with my private key, then you can go back and recover what public key signed that data. We'll go through an example, and in that way you can know it was me, right? So it's a verifiable signature that belongs to me that nobody else can still figure out what my private key is. I'll give you an example. So public-private key pairs, they come in twos. They're not very, there's nothing particularly interesting about this. This is a public key, it looks short. This is a private key, it looks very long. They're both hexadecimal. So the way we sign data is you take the data, so this is, the lorem of some just blank data. I use my private key, and again, we feed it into a public algorithm. The algorithm is the elliptic curve digital signature algorithm. It generates a unique hash. So it's kind of like our hash function in the beginning, except now I'm feeding it 2 pieces of data. So what comes out is a hash that I can then broadcast anywhere. That's my signature of the data. Anybody can come by, look at this signature, look at this data, and figure out my public key. So they'll say, oh yes, it was Joseph that signed that data, right? It's the digital equivalent of just, my normal signature. And so the reverse operation is, exact same public private key. We recover the public key. So we use the exact same algorithm. We feed it the data and the signature, and we get out, this is me, this is Joseph, right? And so bringing it back to the whiteboard example. Oh no, there we go. Bring it back to the whiteboard example. I no longer have to sign the whiteboard with my hand. I can sign it digitally. So I'm not sharing my private key. I can sign all of these transactions, or just generally it would be just the ones that I put on there with my private key to say that if I were John, I actually did owe Steve $5. No one else can fake that signature. You can submit alternate signatures and try to attach them to me, but we'll sort out that problem in a little bit. So questions on that? Yes.
Isn't the hash function public?
Yes. So all the hash functions are public. Yeah.
So any of us could search for a specific, you wouldn't know the original data, right? Because of the hash, but you could search for the hash function.
Yes. So we can search not only for the hash function, but for, we would have the data itself. We would get these two pieces, right? And then if we see the signature, we get it covered. You're like, okay, so we're sending, pictures of this around to everybody. They all have signatures. So we all have the data and the signature itself. So we can now verify without asking anyone individually that that was actually my signature that went on there. Yes.
So for different data, we assign different signatures for it, or we assign the same signature for everything?
That's a good question. So the number that comes out at the end is different, but my private key is the same. So I go through the same operation and I get unique signatures for each piece of data. Anything else? Okay. So that's questions. All right, the last piece, doing good on time, is conflict resolution. So somebody in your system starts going up to the whiteboard and scribbling on it that you owe them $1 million, and now you're mad about this. And the pictures are going around on your text message chain, and you're like, wait, that's not true. And then you have to have some form of conflict resolution, right? So they've submitted fake signatures. They pretended to be you. They've used a different private key, and they said, well, that's actually what happened. That was him in the first place. And so the real innovation of Bitcoin and the proof of work algorithm was to solve this problem. It's like, how do you stop people from faking? And we need a way to automate it as well. We can't be asking every individual to go and provide their public-private key system whenever someone's lying, right? Computers will always outstrip human activity in that case. So for this, I've prepared a demo. Yeah. We're going to play a lottery game. It's gonna be fun. This is gonna be good. Can you hand these out? Yep. All right, so I'm gonna keep one. And can you hand out 5 to 4 people? Wait, how many? 5 to 4 people. Oh. So we only need a few people to play this game, not everybody. So this is a New York State lottery ticket. And yeah, 5 to 4 people. Yep. You're gonna need something to scratch. There's a $1 scratch off ticket. So the data inside it is hidden. And as with most board games, we're gonna play around first, and then I'll explain more about how the rules work. But basically,
5 per person.
5 per person.
Oh, that would make more sense.
Yes.
If you're gonna party that's too.
Yeah, get a scratcher. Your fingernail will come off as a little insufficient.
No,
So these are going to be your miners, the people with the lottery tickets. Raise your hand if you're a miner. Yeah, 1. We need 4 people to be miners. 1, 2, 3. Okay, so if you're scratching right now, too soon.
Oh, I'm sorry.
We're gonna play this game together.
No, I'm sorry.
That's all right. Okay, so every miner should have 5 tickets. Is that what happened?
Yeah.
Did you keep 5 of them, Joseph?
I think I gave off.
You were supposed to, that's all right.
I think we.
It'll take the fun away from the bad actor, but
There you go.
that'll be all right.
I'll fake like it.
Okay, so the presentation up here is wrong. We're gonna be looking for a 4. All right, so when I say go, everybody is going to start scratching on 1 lottery ticket. And when you find a 4, raise your hand and we're all gonna stop. Okay? Again, raise your hand if you're a miner. 1, 2, 3, 4. You have a ticket back there.
Yeah.
Okay.
Never got.
All right, distribution was difficult.
Distribution is terrible.
Okay. Yep, and then the last thing is when you find a 4, you're going to sign the ticket with your name, and that will go to the blockchain, and then you'll get everybody else's ticket. That's your reward. Sound good? Okay, you ready? Set?
Number 4, right?
Just a 4. Yes. Race, set, go.
Remember, if you win, you get everybody's ticket. So you don't start scratching your hand probably.
Yeah. All right, you got it. Stop. Round of applause. Good job, Catherine. Select her ticket then. So her ticket is going on the blockchain. She's going to sign it. She's the miner. And everybody else give her that ticket you were just scratching on. So this is her reward. So she gets a monetary reward for participating in the system, right? All right, you want to stand up here? You will be the blockchain. All right, can I see the 4? Yes. All right, there's actually a 4 on it. So that's good. So we're going to go another round. And now I want you to think about every time someone starts mining and you want to make a transaction in this virtual system, you ask them to mine your transaction. You say, I wanted to give Joe $5. And they're going to write on the back of their card, I gave Joe $5, right? And then, but you know, not everybody is going to pick up that transaction, only some of them. Whoever Joe happened to talk to will pick up that transaction. But what we're going to do is we're going to consider all of the mined transactions as true. Those are set in stone and we believe them. All right, so we're going to go again. Everybody ready? Okay, 3, 2, 1, go. Find a 4, hold up your hand. You got it. All right. Round of applause. Round of applause. Okay, go collect this ticket, and the rest of you, give me your $1 scratch off. Don't worry, these are all worthless. It's rigged against you. You're never gonna win. Okay?
There's a 4.
All right, so now we have another 4, and we're starting to get a blockchain. So you can imagine that. All right, well, he picked up some transactions, and you know, on the back of it, they would all be there, and we could calculate at this point, you know, what anybody has in the system, like how much money has been sent around. So let me go to the next slide. I knew it would happen. So to complete the circle of trust, what we're going to say is that the longest blockchain is the truest blockchain. And so we know that the finding of the 4, and that ignore the 9, we know that the finding of the 4 is not fakeable. We can all look at the lottery tickets, right? In the same way, we can verify just by passing around pictures of it that this is actually true. He actually did find a 4. So we're all going to just believe those transactions. And the reward in Bitcoin is 1 Bitcoin if you happen to you win the lottery that all the computers are playing. So we're going to go one more time. Everybody ready? What? You're out of tickets? Who still has tickets? 1, 2, 3, 4. Okay. All right. At this point, you're going to be the bad actor. So up until now, you have something to scratch with?
Yep.
Okay. So up until now, we've been believing everybody's transactions, and he's going to come in and he's going to submit false ones that says everybody pays me $1 million, right? And to do that, he has to submit fake signatures as well. So you remember, we have a way of doing public-private key signing for all of the things we ourselves have submitted. But he has, you know, if he's going to fake that, If he's going to fake all of the money I spent, he has to provide a fake signature. And then he has to convince the rest of us that that is true, right? Okay, so let's go again.
So could you repeat again my question?
Oh, yes. So you're looking for a 4. If you find a 4, you win. All right, ready, set, go. Oh, we got one. Okay, so he has a 4. He has submitted fake transactions. And this is his blockchain. But what did we say? The longest blockchain is the truest blockchain. So we reject his. Sorry. So we reject his. I'm going to give that back to you. And then we just keep going. And in that way, we can find out that the entire decentralized effort of the entire crowd, playing this lottery system, is going to submit more true transactions than any one person trying to take all of the money from everyone else. And so that's called proof of work. Good, got it? Questions? Ask me a question about this. Yes. Which part?
The part where like his transaction was rejected.
Right. So he's trying to submit fake signatures, right? But I already have signatures on there. So any computer can look and see that his signatures do not match mine, right? And so the algorithm would say, well, does he then have a longer blockchain? And if he does not have a longer blockchain, then we reject all of his data and we keep going with the longest blockchain. Yes.
Could he continuously submit more and more transactions to have a longer blockchain?
Yes, absolutely. So if he's able to build a longer blockchain than everyone else, then we have to believe it. And that's what all of our computers do. They just automatically believe whichever one's the longest. But he cannot fake the finding of the 4, right? He has to find that many 4s. And the idea is that, we're all playing the lottery and the lottery is fair. So that presumably all 5 of the people over here mining would find more 4s than just his effort. Again, no offense. He's a very nice guy. Yes.
So the reward is 1 Bitcoin.
Mhm.
Is it increasingly difficult to hash or mine because Bitcoin is mined, right?
Yeah, so the question was, if the reward is 1 Bitcoin, how does the algorithm get more difficult over time, right, essentially?
Yeah.
And so the program that we all share with each other that does this mining will increase the complexity after X number of blocks. So after like 10 blocks, we'll say, instead of finding a 4, you have to find an even more rare number. You have to find 2 4s next to each other. And then it'll be like 3 4s next to each other. And so the lottery gets harder and harder. Yeah.
Is that benefit the security though, the increased complexity, or is it just to keep it going?
It is to keep the supply from inflating too fast, essentially. Because the more people you get involved, the faster the supply will go. Yes.
So what if the rest of us put in fake transactions? Majority of us.
So if the majority of you put in fake transactions, you are now trading fake money and lying to everybody, right? So the idea is that the entire crowd, the rest of the people would not want to use your system. And so that is a concern, right? If he is able to get together, 20 of his friends to fake these transactions, he will win. And all of your virtual money, again, it's not real money, just think of it as virtual money, will go to them. And so that's called a 51% attack. So if you have a stronger network than everyone else. Yeah. Thank you. Sorry, I think there's still some lottery cards floating around. You can gather them all or hang on to them. It's up. Yes.
Is it possible at this point to have like a longer blockchain than, for example, the Bitcoin blockchain, because it's just so extremely long at this point?
Anything is possible, but no, it's not feasible. You're looking at more mining power than everyone participating in Bitcoin, right? You have to stand up a network that is more powerful than that. And for that, at this day and age, you would need to be able to print your own semiconductors, essentially. And so it's concerning if you were like Taiwan and you decided to go rogue and print your own semiconductor industry into Bitcoin, but presumably somebody would say something about it, right? Do you have something? Okay. Any other questions? Okay, so that's the lottery system for us. The lottery system for computers goes back to the hash function. So we take the opening lines of Shakespeare's Othello. What we do is we add some number, and then the publicly verifiable 4 that we're looking for is that the hash value starts with a bunch of zeros. And that's it. It's like they have to guess what the number is. And when they get lucky, it'll start with a bunch of zeros. And for the complexity, after a certain number of blocks, you have to find one more zero. Right, so the only way the computer can do this feasibly is guess and check. So it starts at 1, it says no. It starts at 2, it says no. Some of them start with prime numbers. Some of them, go 2, 4, 6, 8 just to get ahead of other miners. Yes.
Is it possible for a miner to get some anomaly of luck and get the right? The hash?
Yeah, the hash. Yeah.
STA3, what is it?
SHA-3.
SHA-3.
Yeah.
And that he gets it within the fraction of the time that's anticipated or average.
Yeah, actually. Absolutely. I mean, you can get lucky. So there's a probability distribution function that defines how likely it is you're going to come up with this if you're checking the space randomly. And what you'll see if you are following like blocks from the blockchain is every now and then, you'll get like 2 in a row. It'll be like that. You're like, well, how did they pick up those transactions? Like I was trying to get in there real quick and it just didn't happen. So yeah, just randomly, they will get lucky and they'll find it immediately. Yep. Anyone else? Yes.
So in that case, the longest blockchain may not be a true blockchain.
Oh, it is true because we all agreed it was true, right? So just because one miner gets 2 blocks in a row doesn't mean you can recreate the entire history of the blockchain. So when the blockchain is first launched, like the first 10 or 20, you would want to have a trust network of like friends playing, right? But as this grows and as you keep adding nodes and more people, it becomes a decentralized trust. So I don't need a small core of people that I understand are playing fairly. Once we get to 500,000 blocks, if someone comes in and they start submitting crappy transactions, we're going to know because they have to fake the signatures of the people with the real money in the system. Yeah.
So in its essence, what happened to the Squid Game token?
Oh, Squid Game token, completely other story.
Or nothing to do with that.
Nothing to do with this. Yeah, we can talk about scams and stuff maybe at the very end. Yeah. Okay, so I mean that's how it works. And so now you should all understand that like the effort of the crowd is greater than any single or small group of bad actors. Yes.
So basically, it's like people have to solve a series of questions. Yeah. Like Bitcoin.
Yeah. Yep.
So are all the questions already determined by the blockchain is small?
Right. So the questions cannot be pre-calculated if that's your concern. So they have to take the block, like all the transactions that someone whispered in your ear, they have to add those transactions to the block and all of the signatures, and they have to verify. And then they have to add some number at the end of that block that then results in a hash that everybody can see has a lot of zeros in it. So we're all solving the same problem. Like we're all playing the same lottery, right? We just don't know what the result's going to be before we play it. You look unsatisfied with that. So.
You don't want to talk about pooling too, the individual versus pool, maybe.
I'm not sure what you mean by that.
We won't get into a Bitcoin pool when they all.
Oh, yeah. So there's no like individual miners anymore. What we all do is contribute computing power, and then we split it among like a small group called a pool. So it'll be like, 200 people with, mining rigs will all go in a pool together. And if any one person finds the Bitcoin, finds the hash, then the Bitcoin value is distributed among all of them. So that's how modern based stuff works. Yes.
So how are the questions generated? Like, where do they come from?
The question is only, does your hash start with a bunch of zeros? That's it. So the computer looks at the block, it takes all of its transactions, it runs it through the SHA-3 hash and it says, does it start with a bunch of zeros? If the answer is no, it then adds a different number to the end of the block. Does it start with a bunch of zeros? No. And so, you can't pre-compute it because the transactions are the ones that were submitted after the last block, right? I want to move the money that people want me to move now. And so I have to take those transactions, run it through hash function and see, does it start with zeros? That's it.
Yeah, question? Yeah. So if the computing power the miners have does not increase at the rate of complexity increasing, does the speed of verification slow down?
Yes. So the network will get slower over time if people do not keep dumping in more and more computing resources. And that's one of the biggest criticisms. So we invented this proof of work, which nicely solves like, can we decentralize trust? And it's yes, we can. However, there's a limit because we cannot continue to, solve, essentially find this zero number if we go out 100,000 years. Like that's not going to happen. So yeah.
You think the optics of that situation, I'm optimistic that the system we have today with US dollars, cash, and the risks.
Can't comment on that.
Fair enough.
Yeah, I'm not an economist, so. Yeah.
What do you think about proof of stake? In contrast.
So proof of stake is basically taking all the people who have acted well in this system in the past, allowing them to stake money. And if the entire crowd decides that they're lying, you take their money, right? And so I think it's a nice way forward, but it's a trade-off, right? It's always a trade-off between, what's the most secure, what's going to be faster, and what's going to be scalable. Yeah. I mean, a lot of them are moving to it, and it makes sense to me because the energy cost of doing this problem now is kind of absurd. Any other questions? Last question?
Yeah, last question.
Okay.
So this currency is deflationary because it's finite and perceived to have increasing demand.
Deflationary means it means something different in cryptocurrencies. It just means, does the supply go up or down? I think in economics, deflationary, you would think of a deflationary asset as the value going down, right? Like a car is a deflationary asset. But in cryptocurrency, it's just whether or not the supply is increasing or decreasing. So Bitcoin, the supply is inflationary. Dogecoin, it's inflationary. For some of the tokens like Dogecoin is deflationary. And so that it just has different economics for how it's going to play out. Yeah.
Shiba is also deflationary.
Great.
It is?
I don't know anything about Shiba. I thought you were telling me.
No,
It is not. Yeah, I mean,
I was wondering what the difference was.
I think they launched a deflationary one, but
They launched the deflationary token. The other one,
Hayden will tell you about Shiba.
We can talk more about that later.
Yeah, okay, so I'll wrap up here. So the way this presents as investor opportunities is eventually someone's going to want to play this game with you. So you're all doing the cool thing, you're exchanging money on your whiteboard in your apartment, and someone's going to come by and be like, well, I want to do that too. And you'll be like, well, give me $5 and I'll give you some, fake virtual money. And that's what happens. So if you believe in the growth of the economy as a whole, then you would invest in something like Bitcoin. So it's really like, can we get that utility of everybody trading money on the whiteboard? And then it quickly moves into speculative markets. So they set up like normal centralized trading exchanges, the same way like the NASDAQ works. It's like, oh, I invest in Bitcoin now and more people want to use it today, so I'll sell and it'll go up in value, et cetera, et cetera. So again, this is not me trying to sell you on virtual currencies. I just wanted you to have an understanding of how it worked. So with that, I'll say, if you want more blockchain videos, check out 3 Blue 1 Brown. They have an excellent one on this. And that's it for my talk. Thank you very much. Yeah, any final questions before I wander off? Yep, okay. Yep.
Can you talk a bit about the Bitcoin Lightning Network?
The Lightning Network? I don't know anything about it. Only on Ethereum, sorry. So people are desperately, what I do know is that people are desperately trying to solve this like energy use problem that you alluded to. As the problem gets harder and harder, they invested money in Bitcoin because they wanted to use the cool new system, but now they can no longer send transactions because it costs them like $100 to send someone $5 because the computer's got to work that hard to find the solution to it. Everybody's working very hard. And as this goes on and on, it's just going to get harder. And so there have to be scaling solutions, some way for the computers to have like a finite amount of time to play that lottery, but it's still fair to everybody. And so the Lightning Network is one that helps to solve that problem. He was first, and then sorry.
What are some of Hoge's like future plans?
Future plan. I'm going to leave this to Joseph because he's going to talk a lot more about that.
Do you want to transition into his?
Yeah, you might start mine.
Yeah, go ahead. Sorry, yours first.
Well, yeah.
Back there, you have one? Yes.
So what makes Ethereum cleaner than Bitcoin?
I don't know that it's a lot cleaner right now. The transaction prices scale with each other just because of market forces. Right, there's so much arbitrage from Ethereum to Bitcoin and back that if Bitcoin were to become cheaper, to solve the proof of work for even a day, people would move their money over to Bitcoin and trade it back and forth really quickly, and then it would be just as expensive as Ethereum. So that's kind of like a nice game theory thing you can look at. And yes.
Regarding on top of blockchain, proof of stake work and view, which one do you think is more scalable?
I mean, proof of stake is definitely more scalable. It just is by nature. So the idea is that if you are found to be lying, there are many consensus gathering mechanisms. Proof of work was the original one, and everything is some sort of variation on that. But if we have our consensus gathering mechanism and you find that somebody is lying, the proof of stake says, I put in whatever 100,000 Bitcoin, again, virtual currency. If he is a liar, then we're going to take all his Bitcoin and not let him play the network anymore. So you have like this incentive to play nice with everybody, except in the instance that the opportunity is greater than the cost for lying. All right, I gotta hop off. It was good to talk to you guys.
Want to use the clicker? Do you want to?
That's fine. I'll go without the mask here. Might be a
Thank
little
you.
better. Quick question. What does DeFi mean? Who knows? There you go. Decentralized finance. Easy. We're going to go through about DeFi done right. What does it mean? How does it work? What is the different levels to DeFi? So we're going to do that process. Okay, what you need to know. DeFi removes the middleman, right? It's minimum regulation oversight, and it's still being developed. Think of DeFi as like the Western expansion, right? It's brand new. There's not a lot of regulation to it. You can easily get hacked, scammed, and nothing can really be done to those people. Right? It's really going to be really hard to enforce rules and legislation on DeFi. People are going to try it. The U.S. government's trying to do the infrastructure bill. They will not be successful at this point. I think the only way they're going to be able to be successful is if people cash out their money and they track it via the names and how they do it that way. DeFi is very hard. It's like the Wild West. So here are the components. We have 4 levels of DeFi. The first level is the base level, which is the settlement. And then we have the protocol, the application, and then the aggregation. These 4 together, typical consensus, most people say 4, there could be up to 6 or 7, depending on who you're talking to. But for today's speaking, we're just going to talk about 4 components of DeFi. So the first level, we have settlement. And so this is the base layer. This is essentially the blockchain. And you all are pretty familiar with most of them. You have Bitcoin, Ethereum, BNB or Binance. You also have things like Solana, ADA. Those are all blockchains. That's the base level. So each of those levels have their own currency that's used that blockchain. Level 2 is the protocols. And so these are the rules that are written to govern the tasks or activities. Typically, they're like liquidity, their farms, their lending. Essentially, you've heard of some of these. You have side chains, and they're basically run separately from the main blockchain, and they operate independently. One of these examples would be like XDAI, and so it's a 2-way bridge on Ethereum. Yeah, Plasma and these solutions use the Merkle trees to create additional chains to the main blockchain. And so this facilitates the faster transactions at a lower cost. Typically, you're going to see this a lot with Polygon, formerly Matic. So you'll see it's cheaper, it's quicker. It's primarily used because of Ethereum being so costly. Another one is channels. There is more, but these are just 3 examples. And so channels, they offer the users a variety of ways to make multiple transactions off-chain. And so one of those examples would be rating. It's pretty common. Go back one there. There we go. So next is we have application. So this is going to be the most popular one for the most part. You all are going to see things actually sit on top of it. So basically, it consists of consumer-facing applications. These include DEXs, NFT marketplaces, lending services. So you're going to see decentralized exchanges. Every blockchain usually has a decentralized exchange. Currently, like Cardano is in the process of adding a few of them. If you all heard of SundaeSwap, Maladex, those are 2 of the ones coming to Cardano's decentralized exchange. If you're familiar with Ethereum, you're going to see things like Uniswap. If you're familiar with BSC, you're going to things like PancakeSwap or PadSwap, or you even have HogeSwap BSC. as are all decentralized exchanges on these blockchains. NFT Marketplace. These are peer-to-peer marketplaces for crypto collectibles and digital assets. Can you give me, anyone here can give me an example of an NFT? Y'all have ever owned an NFT? You were bought one, yeah. Okay, anyone else? Go ahead. CryptoPunks, yeah. Do you see how much that last one just sold for? Was it? Sorry, okay.
Twitter founders tweet.
More than?
The Twitter founders tweet.
Twitter founders, yes. Jack's tweet became a NFT. So CryptoPunks, I think the latest one just sold for 9.5 million. Could be off. It's crazy. Yeah. What's that? Okay, yeah. Good job. Sorry about missing. Okay, so let me tell you a little bit about NFTs. Your entire life you've been buying NFTs, you haven't realized it. Who here has owned Madden or maybe Call of Duty or any kind of digital game, right? Did you buy a gun? Did you buy a skin? Did you play Fortnite? Did you buy an emote? Those are all NFTs. It's a digital asset that you own. There's no purpose in the physical world, just a digital asset that you own. Those are NFTs. You've been buying them your entire life. Now we have marketplaces that have NFTs. The new trend is to have utility behind them. They can be concert tickets. You need a concert ticket NFT, gives you backstage pass. Maybe it's a perk. Maybe it's something that's happening in the real world. Meet and greet. Maybe it's a physical item paired with a digital item. And lastly, we have GameFi. GameFi is going to be the new technology. And with GameFi, you're taking NFTs, you're mixing it with the blockchain, and now you can have a special key to a game. Maybe like with Hoge, we have Mega Hogeman, right? It's a game you can play because you have NFT. Okay, number 4. This is the last part. And so this is the aggregation step. This connects the various applications together from the previous layer and provides a service to the investors. The idea is a very seamless combination together. So beginning with are these wallets. If you're familiar with wallets, the safest will always be the cold wallet. Cold wallet means it is not stored online. It is a physical, it's a device similar to this. Maybe it's a nano, maybe it's a treasure. It's a device that you have to plug in to use in order to transfer or transact on any crypto, buy, sell, trade, right? It's going to be the best way for you to keep your assets safe. Next, we have the hot wallet. So if you're familiar with like Coinbase Wallet, MetaMask, Trust Wallet, XDeFi, several wallets, it's online. It's very easy to get hacked. You click on a link, you give somebody your 12 words, you leave your computer open. You know, your mom comes in your room, clicks a button, boom, it's all gone. Not as safe. And you have the original cold wallet, which is a piece of paper, usually have 12 words or a QR code, you kept it in your pocket, keep it in your bank vault, that's how you know your sales. It was the gold standard for a while, but now cold wallets are probably the best and safest way to do it. Okay, crypto terminology. Now, I won't have all the terms here, but if you have a question, we can go over that. These are pretty good consensus of most of the ones you want to know. Okay, so what is the difference between centralized exchange and decentralized exchange? So when you think of decentralized exchanges, they are platforms which are facilitate the buying and selling of crypto, right? And essentially, these exchanges are going to bring fiat. Who knows what fiat is?
Yes, dollar.
Yes, yeah. It's basically currency backed by government. It could be anybody. It could be peso that's backed by the Mexican government. It could be, you know, the British pound. And so essentially these are trusted intermediaries and trades and often ask, I'm going to speak English today. They act as custodians by storing and protecting your funds. And then you have decentralized exchanges or DEXs. These are interesting in the fact that there is no middleman, right? You or I become the bank. You and I stake liquidity and we facilitate that trade because there's money in the bank that basically automatically sells and buys. And so these are pretty cool because there's no middleman. There's more trust in this process. And all you have to do to be part of this decentralized exchange is you have to connect your wallet, right? Go to Uniswap, go to PancakeSwap, go to HoshiSwap BSC, go to ShibaSwap, whatever that exchange is called. And then you essentially connect your wallet. You choose your pairing, so maybe it's Ethereum and Hoge, maybe it's Ethereum and SHIB, maybe it's BSC and SafeMoon, and then you just click swap. And you just facilitate the trade without any kind of middleman. Now there is still a process in which the people that provide liquidity receive funds, they receive a little bit of that transaction fee, and the platform receives a little bit of transaction fee. Okay, some different types of currency. So fiat, as we just talked about, is a government-backed currency. So dollar, pounds, peso. Coin is the native currency of the blockchain. So you have Bitcoin, BNB, Ethereum, Solana, ADA. And then lastly, we have token. Token is an asset that sits on the blockchain that's not native to. So Hoge sits on the Ethereum blockchain. It is a token, or if you want to think of it like a parasite, it is a parasite of that blockchain. SHIB, SafeMoon, BNB, not BNB, SHIB, SafeMoon, Dogelon, Poly Doge, Baby Doge, basically any word you want to come up with the word Doge sits on someone else's blockchain. All right, Baby, Emu, I think those are all pretty common these days. So. Technical terms, so smart contracts. Smart contracts, they are an algorithmic program that enforces the terms of the contract automatically. One of the main values of this is within the Ethereum network, and basically it executes the contract. If this happens, then this happens automatically. Forks is when you take a smart contract in existence already, you copy it, you change one little thing, or maybe two little things, or maybe as many things as you want. It's a fork of an original smart contract. So if you look at Uniswap as being one of the original decentralized exchanges within Ethereum, people will take that contract, copy it, change a few things on it, and name it something else. They call it Sleepy Swap, which is the Phantom version, or Pancake Swap, or Fill in the Blanket. There's a lot of forks.
So theoretically, you can create as many as forks that you want to.
Absolutely.
As long as people believe that there's value.
Yeah, it's super easy. You can go online. It costs you maybe 1 Ethereum possibly to create contracts. You can copy a token, you can copy a blockchain, you can copy whatever you want to copy, make your tweaks. The big thing that it won't matter unless you have people come to it. If people don't use it, then it's just out. It costs you that money for no reason at all. And so you can fork anything you want, which is pretty interesting. And Nfc Marketplaces, you can fork that. And then we have Decentralized Apps, or dApps. And these are just applications made by developers to just make it easier for you guys to interact. So we talked about DEXs being one of them. Maybe it's a gaming platform which you can connect things to, or just an easier way for you to access your wallet or to see whether that purposes of that website. So some common terms. Decentralization. This is the principle of distributing power away from a central point. So CFI. Y'all know what CFI means? Centralized finance. Yeah. So who's centralized finance? I got you that time. Thanks, yeah. The people that pretty much make all the rules, right? People with the money, they get together. They're the ones who make the rules. Minority makes the rules for the majority. Decentralization allows you guys, the majority, make the rules for the whole process, right? Just like with Ethereum that Joe was giving an example for in Bitcoin, the majority come together and say, hey, this is the real thing. This is the thing. This is how we're going to implement this process. So yeah, getting into there. Mining fee or gas fee, typically there's a fee in all the different networks. And so Ethereum right at this point seems to have the highest fee, which they run as Ether. So here's the Ethereum fee. Then we have non-fungible tokens, or NFTs. These are the digital assets, art, collectibles, perks, tickets, whatever you want to call it. Maybe it's the emote, maybe it's the clothing you wear for your magazine, whatever. So this is the fun part, right? So y'all know about blue chip stocks, right? Well, the same thing in crypto. You have blue chip crypto, and you have shit coins or altcoins. Most people call it the shit coin casino, right? It's the fastest way you can take $100 and make $1 million. It's the fastest way to take $1 million and make $100. Okay, so that's up or down very quickly. And so typically the difference between blue coin or blue chip, these are long-term. These are really high market cryptos. They have a really good team. They have a really good roadmap. These are ones that you can think about for the next 20, 50 years, right? Bitcoin, Ethereum, ADA, things that have a really long futuristic roadmap. You look at the shitcoin casino over here, right? So these are like penny stocks. You're gambling, more or less. Those coins that are 0.00000 10 times 1. And you think to yourself, what if this thing gets to a penny? What if it gets to 2 cents? I could buy 1 billion of these, but if it gets to a penny, man, I'm gonna be rich. When you think of that terminology, you're typically talking about this bucket over here, right? And pretty good example, go to Reddit, close your eyes, pick, you just found a shitcoin. It's on there every day. Y'all seen it. Who's seen it? Yeah. Name me one. Yeah, just give me one. Shiba. Oh yeah. It's a pretty big shitcoin. Now there's a problem with this though, right? The problem with Shiba is if you do the mathematics, who knows what market cap is? I recommend.
Yes, the markup would be the price of the coin times the.
Correct. Yeah. It's the price times the supply. How many does Shiba have? Do we know? Yeah. I think it's a quintillion, maybe.
It's like 413 trillion, I think.
Is it four? I think it's more than 413.
Growing every day.
Which really.
No, I think the answer is closer. It stays 400 trillion.
That's what's on Coinbase at least. I don't know if that's accurate at least.
We'll call it
Oh,
close
shit.
enough. I'm not
Thank
sure.
you.
So Shiba has 400 trillion, let's say. If it gets to a 0.01 or a penny, that means the market cap has to be $1 trillion or pretty close to $1 trillion, right? What in this world is close to $1 trillion other than the US government debt? I can't think of anything. Go ahead.
Bitcoin market cap.
Bitcoin's pretty close. We actually broke a record yesterday. Do y'all know what the record was that we broke? Yesterday, we broke 3 records.
68,000.
Bitcoin high, 68,000. Ethereum high, and what else? We had total currency. So total cryptocurrency broke $3 trillion yesterday, which is huge. If we're saying that SHIB is going to have $1 trillion market cap at a penny is almost impossible. That's 1/3 of the market currently. That's if you're in SHIB, it's not going to be doing that good very long. Not financial advice, just smart. Okay.
We can go ahead of Tesla.
Yeah. Absolutely. Yeah, definitely. So the next slide here. So this is the best advice I'm going to tell you is do your own research. Don't take my word for it. Do your own research, do your own due diligence. Don't just put any money into stock or into crypto or anything else without knowing more about crypto. Now I'll give you a couple good blue points. If you follow these steps, you have a pretty good example of not to get right. You know, we talked about the Squid Games token. Who knew what happened with that token? Okay.
So basically the token went up and fall in a second. There was a very big red candle and fall into zero.
Yeah, the token had the biggest green candle I've ever seen in my life. Y'all saw that? It was straight up, and within 10 seconds, it dropped. What happened was essentially a honeypot. Everybody could put their money in, everybody take their money out, except for the developer. He took out $7 million and crashed the project 2 seconds later. It went from, I remember the price, it went down to 0.0001, I think we cashed out, so it was worthless. Nobody paid on that. But people are still investing after it happened, which is really sad. Those people definitely did not do their research, or read the news, or read any article or anything. So some things you want to look at is the flat wallet distribution. Why does this matter? Because you don't want the top 10% of the holders to be able to tank the price of the coin or the token or whatever your investment is. You want to look at a realistic roadmap. If someone tells you I want to get on Binance next month, that's super hard to do. That's not realistic. It's going to cost a ton of money. It's going to take a lot of work. Binance just doesn't take anything. So that's not a roadmap item I would invest in unless it was really like a quality project like Ada or someone who's a top tier group of developers. Token Sniffer is really good. You can take a contract, you can put it in there, you can compare our contract to everybody else's. Say, hey, look, this is the host contract. We can look and see there's a million other contracts out here just like Hoge. And then you can say, here's another contract of Squid Games. Maybe they just copied or forked that contract, renamed it Squid Games 2. You can see it's the same exact honeypot. They'll tell you, hey, does this look like a good token? Does this look like it has the owners have the majority of the shares? Does it look like there's an issue with liquidity with it? So you can do a lot of checking in that aspect. And then last but not least is for research is IDO versus fair launch. We're going to cover that a little more in the next slide, but essentially how did the initial sale of the tokens go? Was it fair? Did they just launch a project and anybody can buy it? Or was there a pre-sale? Did a bunch of people get together and say, hey, look, I only buy 10 million, you buy 10 million, you buy 10 million. And all of a sudden we've made 20x our money the day it launches. So definitely good to watch out for. Typically IDOs are not as safe as fair launches, but it just depends on the project, depends on the quality. Sometimes an IDO, if there's a governance team, they maybe have the first status. Okay, Hoge Finance, the top dog of DeFi. I'm also biased, do your own research. Okay, wallet distribution. The top 50 people within Hoge have less than 10% of the total supply. That's a great sign. If you're looking at the top 10% of anything, the top 10 wallets, and they have like 20, 30%, get out of the project quickly. It means they can sell out the entire project you did, you lose all your money very quickly. The roadmap. Hoge has executed on every single roadmap item it's ever had, all right? Except for one. We didn't list on a US exchange, which has been pushed back to Q4 or Q1. And so essentially US regulation had put a stop to that. A lot of rules were going through. I think a lot of these exchanges had to reevaluate their process for becoming tokens. And we kind of got pushed back a little bit on that. So hopefully this next quarter that'll be fixed. We have the lobbyists, we got all the stuff going on. So hopefully that gets worked out. And last but not least, Token Sniffer. Hoge is a fork of the original RFI contract. RFI was the original deflationary token. Hoge is a fork of that. The big difference between us and others is we have no dev wallet. I'll jump out of the way if you want to look at the screen. And essentially, when I say no dev wallet, there's no incentive for us to do anything with Hoge. We're all volunteers, we own it, so we don't have our own bags. We're not getting paid. It doesn't matter if you buy or not. We're still going to develop, we're still going to work. We don't have a marketing funds, so we're not charging you a tax for every time there's a transaction because there's no dev wall, there's no marketing wall. So it's pretty awesome as far as the volunteer is. And later, when I give you all this actual document, you can put these links and you can see all the different sources and then further do your research that as well. Okay, next slide. It's the little things that matter. So when we talked about IDO and we talked about fair launches, right? IDOs, or initial DEX offerings, are tokens that represent any type of asset hosted on a decentralized exchange. And essentially, it's when the project launches the token through a decentralized liquidity exchange. So they get a list of people and say, okay, we're going to whitelist the first 50 people. These 50 people could all buy, let's say, $1 million of each. And then we sell it. And their initial price is, let's say, 0.0 10 times 7. Everybody who's after them is going to have 0.04 times 6. They've all 1,000 times their money or whatever it may be. And so it's kind of fair for them, but not fair for you guys, right? They've all made their money, they're whatever it is. Very launch, everybody has the same opportunity. We all buy at the same time, they launch at the same time. Nobody had the heads up notice. We all just saw the project, we thought we liked it, and we just bought it. It was fair, right? Hoge was fair launch February 7th, 2021, by the way. So we're about 10 months old almost. Yeah, a little over 10 months. So Hoge is DeFi done right. So what have we done? So Hoge was the first decentralized finance deflationary token asset that was ever on Circuit. We paid a fee, they audited our entire smart contract, and they said, look, you guys are safe, right? There's not going to be a rug pull here. There's not going to be any problems with the smart contract. We're not locking anybody's funds in. And so you can view the CertTech audit there, where I think we're currently at 86. I think we fluctuate between 86 and 93. Next, we have a legal opinion. We're not a security. We are a commodity. There's no dev wallet. There's no marketing wallet, you know? So we have no secret sauce or juice to worry about there. When it comes down to the legal deal with US exchanges, when they start pulling these tokens off, we don't have to worry about that. We've done all of our due diligence. We're also a legal nonprofit. Anybody know where Ethereum has their association from? What country? Nope. 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 One more guess.
Switzerland.
Switzerland, yeah. So Switzerland. So, yeah, Ethereum is an association in Switzerland. So we actually have our same legal association or legal nonprofit through Switzerland. We are part of the Swiss Association, which is a very elite group to be in for crypto. You don't just get in there pretty easily. It takes a lot of work, but several of us had to fly to Switzerland to make it work. And we had to become signatories and all kinds of stuff. So it's not very fun, but it's part of the process. And they don't get paid for it. They did because they want to do it. We're also a DAO hybrid. Who knows what a DAO is? It's okay, Dion, it's kind of a weird word. DAO is basically decentralized autonomous organization, meaning that we are community owned and operated. And everybody here who owns Hoge can make a decision and say, hey, look, I want Hoge to do this from now on, and then we implement what you're asking for. So it's the majority votes. Let's say you have a question. You say, I want Hoge to donate 10% of whatever we raise through outgoing activities to go to charity, right? The whole community then votes on the proposition and say, okay, it passes, 51%. So now the next time we raise money, 10% of it needs to go to a charity. The DAO voted on it, we have to basically act on that. So as a DAO, the reason we're not a full DAO is because the DAO is technically not a legal organization. We are a legal organization. So we call ourselves a DAO hybrid. So there's a couple DAOs out there already. ThorSwap, ThorChain is one, Maker is one. There's actually quite a few DAOs out there. ENS is one, so they're a good group as well. We're an open brand. Anybody in here can do anything they want Hoge. As long as it's not pornography, selling illegal drugs, anything that's bad. Hoge will not go after you. You can't trademark the name Hoge, but you can do whatever you want. You can make t-shirts with the Hoge logo and sell it, you can do that. If you want to make business cards or shot glasses or whatever you want to do, flash drives, you can do that. Who cares? You know, it's whatever you want to do. Open brand. As long as you're not negatively hurting the image of the Hoge, you're free to do whatever you want to do. So if you want to build a satellite, right? Like Hoge is putting a satellite in space. He's working with a bunch of engineers. If you want to build an Nfc Marketplace, like Zach is doing, you want to do anything with Hoge, you can do it. If you want to build a university platform like I do, you can do it. Open brand. And community, right? Hoge has community. There's over 100,000 people on Hoge currently. About 80,000 are on decentralized wallets. We have about 20 to 30,000 on centralized exchanges. And they're all empowered to do whatever they want whenever they want to do. We have a really active Telegram. We have a pretty active Reddit. I think over 20,000 people. We have a pretty okay Discord. It's getting there. It's actually need better. It's a pretty good group. We have Facebook. We have Instagram. We have quite a bit of channels. So if you want to reach out and get connected. There's some really good people within Hoge, in an awesome community. And I'm biased again. Do your own research. All right. So a couple questions I have for you, and you can ask me a couple questions. We talked a little bit about the blockchain. What do you think are some things that the blockchain will solve in the future? The current pain points that you guys are dealing with every day.
The internet using our data.
Yeah. Okay. By the way, these flash drives I'm passing out, I've got a handful left, but one of them has a password for a wallet, and that wallet has over 1 million Hoge in it right now. So when of y'all are going to walk away with about $500 tonight? So for you asking questions and stuff, y'all may earn some money, maybe not. Odds are you probably didn't, right? There's more flash drives than people have money, but we'll see. So it works. Y'all are free to ask questions as well. Here, thanks for your help. So what else are we solving? What's the blockchain we solve in the future? All right. Yeah. Oh, I'm so sorry. Very skipper. Might help him out there. Yeah. One more time.
Transferring money takes way too long.
Transferring money. Yeah. I think blockchain's going to kill Western Union. All right. Bye bye those guys. Okay.
So how do you feel? Don't you feel it's a very bold statement to say that Hoge is a commodity story?
Yeah.
Commodity.
Definitely a commodity. We paid for a legal opinion, and the lawyer, Mark is his name, I think he worked with Luke a little bit, said they're a commodity for these reasons. There's no original developers. Developers left Hoge day 3, right? The original people that actually intended to scam people with this project left Hoge day 3. The community took it over. The community bought the smart contracts, put it in a multi-sig, meaning that it takes 3 people, 2 of the 3, to act on anything within Hoge. Smart contract only has one function though, that is to remove the power, or to remove the reflections away from a wallet. Typically that is only used on exchanges. If you go to an exchange like Whitebit does not receive redistribution. We're taking that power away at their request. They don't know how to do it. They don't know how to use it. Makes it easier for them. It helps us out. So we remove it. Yes.
So dealing with the topic of like just overall cryptocurrency, right? You mentioned, I think it was you or him mentioned a great idea that, you're not investing in, when you set up a blockchain, you're not investing in, let's say, just Hoge, you're investing in the ERC20 ecosystem, so to say. Do you think that the term cryptocurrency is a bad term, considering that, again, you are now a commodity, essentially? When you develop your own coin or token, whatever, you're not necessarily going to have utility like a dollar bill will or Bitcoin will as of right now. Do you think that the term cryptocurrency should be changed, or do you think that that's a solid, term?
Yeah, I think cryptocurrency is accurate just because it's a digital currency. But obviously, it's going to be people like you who are going to change it, right? You're going to develop something, and people are going to like the name or the term, they're going to go with it. By the way, I'm out of flash. I was like 2 other things left. And we have shot glasses. I mean, adult beverage drinking cups. Everyone thought. So yeah, so currency. I think the terminology is going to change depending on who's using it. Right now it's a pretty younger crowd that's using it. And as you guys start getting more developed in what you're buying and what you're using, y'all are going to change a lot of things in this thing, including what the blockchain is doing currently. How many people here have a driver's license? Okay. How about an insurance card? Right. How many people have paid property tax on their car? Right. Those all kind of suck, don't they? Right. You go to a doctor's office, and what's the first thing they ask you?
Insurance.
Insurance. But why? Why do they need it for?
Payment.
Okay. What's the second thing they ask you?
What's wrong?
What's wrong? Okay. Third thing? Yeah. Who you are, why you're here. How about family medical history? How about what medication are you on? How about any allergies you have? Right? What if we had a blockchain that had an insurance card, so to speak, that you scan your card when you go to any doctor's office, and they know those questions right off the bat. They know that, Javi here, right, has an allergic to penicillin. They know that his family is diabetic. His mom died of cancer. His grandmother is sick with whatever it may be. So he's more likely to have those things, right? And so now they can ask that one question one time, and it'll always be updated for anybody. If he goes to another country, they scan the same card, they know the same information, right? It's very transparent. The only people that can change their doctors, they don't really change it, they just add to it. Hey, Javi came in today, he's sick with an allergy to oranges. They can add that into his file. Think about title companies. I do real estate as well. We're paying people to go back 400 years to look at a property and say, hey, look, this property has a lineage of ownership the last 400 years. Why can't blockchain do that? Why do I have to pay someone $1,000 to tell me that? That's a pain point to me. It doesn't make sense, right? Okay.
Well, also, I don't know if you've been seeing that's in the crypto space. They've also been talking about when you buy a home, typically you pay some random mortgage company thousands of dollars to transfer the house fee from one place to another. They're talking about maybe in the future having your house fee to turn into an NFT. They go from one wallet to another, cutting out that whole mortgage fee of thousands of dollars just because of something like that on the NFT blockchain.
100%. And you may only pay $5 for that, right? But you better put that on a hardware or a cold wallet because you don't want that to be hacked and stolen and
Yeah.
has to be gone like the next day.
So it seems like if we go down the path of blockchain, there's not going to be any room to break the rules or to be smooth. Like, say back in the day, no video cameras, credit card frauds, a bunch of stuff. People can check hiding, right? Eat. Say in the future, if crypto goes, I know it's decentralized, but if the minds behind crypto development become sort of like elites in some way, it's possible that the fact that you can't replicate or commit fraud and everything sort of online potentially be a bit dystopian.
It could. I mean, people think Big Brother, right? What if Big Brother implemented a blockchain and they force you to have, so to speak, a tattoo on you? And this number was your way of doing everything. It could happen, right? But ultimately, it's only when you use it, people like you use it. All right, the majority have to use it for work. Y'all don't use it this one. And anything be that, right? We have really good technology, but sadly, most of the technology that we have come from wars, NASA, and you look at your mattresses, things like that. The fabric, the way things are stitched, the way things are done, and come from bad things. Because ultimately, as humans, I think it's our job to leave this world better than when we entered, right? And it's up to you guys. You guys are generation. I'm old, right? I'm probably closer to 50 than you guys are closer to 40 at this point. 36 going on 80. So y'all are going to change the world. Y'all are going to do some wonderful things. You guys are asking really hard questions. You guys are observant. You all been through a lot of horrible things. 9/11, right? Y'all been through COVID. Some of the worst things that happened in U.S. history, you all been through it. And your minds are analytical. You guys are thinking things from a different perspective. I was around when there was no internet. Your entire life you've been connected. All the information has been transparent to you. Blockchain is not different. It is transparent. It's mutable. It's 100% source of truth. And you guys are going to change this world for better. People that are doing political science, people who are doing engineering, people who just want to change the world through easier ways. And it's going to be you guys. You guys are the future. That needs some good work. Any other questions? I got two more things to give away.
And how can we like involve?
That's a good question. So how do you get more people involved? See, I got that one. Anyway, it only took me 16 tries. So really just spreading the word. Currently in the whole world, I think 2% of people are using crypto. So it's still super early. Just about anything you invest in, for the most part, if it's not a rug pull, will make money because there isn't that many people using it. And I think it's gonna be easy to use. People get sick and tired of using Western medium. Why do I have to spend $10 for somebody to get it, where that person has the inconvenience, go to a place that has it to get money out? When you just send here, here's 20 Dogecoin, here's 1 million Dogecoin.
How do you feel, because you took on UV into real estate, how do you feel about smart contracts being probably a future?
It needs to happen.
It has happened.
It needs to happen on a global scale. I'm from Arkansas, right? Arkansas is not really ahead of the curve on a lot of things, except for maybe cavities, bad dentists, things of that nature, right? Bad football programs typically, good this year, but it needs to be more widely accepted. It needs to be more, it needs to happen in a way that the politicians don't stifle it. Because let's be honest, right now, politicians are doing what they can to tax it. And what I would consider a crypto space race. We are going against China, we're going against Russia, we're going against these other countries on who can develop the best launch. And if you look at traditionally the US being involved, they've always put a lot of resources on things like the space race or whatever, maybe wars, maybe it's poverty, maybe it's just influence. But at the end of the day, we are in a space race for technology, and if they stifle it, we're not going to be first anymore. We're going to be someone else. And odds are it could hurt the industry. We could, put a 10-year, fork in it for sure. Kind of thing.
Don't blockchains like not belong to a country? So it's a global currency. So why would there be the national rates?
I think the technology itself, just remove the pinpoints, right? If a government said, hey, look, we want to make that, El Salvador, for instance, said Bitcoin is now part of our national currency. Our inflationary dollar in Venezuela, for instance, is horrible. I think at one point it was like a wheelbarrow of dollar bills for one loaf of bread, right? They're combating that by using something like Bitcoin or something like Ethereum. And I think naturally there's some incentives, like China, I think is coming out with the digital yuan, I believe. And I'm going to do some more research on how it's going to work, but they're going to force their people to use this digital dollar that they have. And so I think naturally, when you look at that kind of stuff, the people that come closest to that in implementing this will be the ones that head the curve for other people, for other technologies, and making it better, right? This is a new industry. Bitcoin has only been around since what, 2006. Crypto as a whole has been around maybe 3 years longer than that. Bitcoin wasn't the first coin, by the way. You all know Bitcoin was just the first one to be popular. There's been tons of cryptos before Bitcoin. Right?
Question for NFTs.
Uh-huh.
Do you think NFTs have scope in the future, or is it just a hype thing for one person?
Yeah, I think NFTs are going to be around forever. You know, let's just be honest, you've already been buying NFTs your entire time. When was the last time you went to Ticketmaster to buy a ticket? All right, it's on your phone. You go to a football game, it's on your phone. You go to anywhere, you order your drink at Starbucks, the receipt's on your phone. But they're all NFTs. It's a digital asset that gives you something. Recently, we call them PFPs, profile pics? And so essentially like crypto apes, for instance, or crypto punks. You know, $1 million, $9 million, $10 million, whatever it is for this crypto punk is the new version of like the Rolls Royce to the rappers, 10 years ago. It's the new bling, it's the new Rolex. You can now say, I have a Bored Ape Yacht Club, take a look at my phone. It's a status symbol. And so I think in the future, though, there has to be utility or people won't buy it.
So why would we take a coach instead of just using Ether for like currency? I'm still confused on that.
Yeah.
What's the benefit?
Now, personally, I wouldn't pay for anything in Doge. And the reason being is it's deflationary. And for me, I look at it more as a store value. It's like a savings account, right? When I look at Doge, I look at Doge as being inflationary. There will be more Doge tomorrow than there is today. There will be less Doge tomorrow than there is today. And so Doge, I look at as my checking account. I only spend Doge all day long. I only spend the dollar bill all day long. The things that are gaining value over time, I only keep in my pocket. I only keep Bitcoin in my pocket. I'm not going to pay anybody in Bitcoin. I'm just going to hold on to it. So I believe that Bitcoin is going to be worth a lot more tomorrow than it is today. I believe that Hoge is worth more tomorrow than it is today. So I wouldn't pay anybody in Hoge. Unless they're a family member, a friend, something you believe in. To me, it's a store of value. It's a savings account.
Like a stable coin?
Not a stable coin. Now, stable coins are like USDT, USDC. The value is typically pegged to $1 and it never changes.
So you're saying that the likelihood of Shiba hitting a market cap of $1 trillion is very low?
Yeah, like it's not, to me, I don't think it's, Joe would say anything's possible. I don't think it's feasible at all.
Right.
I wouldn't put any money in it.
So let's just say that, because right now the global economy, like you said, 2% is in cryptocurrency right now.
Correct.
Let's just say that that eventually in the far future transfers over to 100%. In a case like that, would it be
Case like that, yeah, entirely possible. Absolutely. If the entire world was on crypto and everybody was forced to use shit, yeah, absolutely. Sorry, we started that.
What do you think about like the longevity of Ethereum, or new generation like Solana, Algorand, but effectively more efficient?
Yeah, I think Ethereum currently is the gold standard for NFTs. It's the gold standard for a lot of things that are happening. There's some people that would tell you there's a great flippening coming, and the flippening is where Ethereum overtakes Bitcoin, right? Currently, there's a lot of assets, a lot of tools pegged to Ethereum, like Matic, Polygon. And do I think other projects are better? There's definitely some good projects. Look at, we were talking about today, we were conversing about Polkadot, right? We were talking about, ADA, we were talking about these other crypto tokens and coins that come out to beat what Ethereum is doing. The problem right now is how you ask it. Unless Ethereum can do that, their longevity may not be as good as it may seem. Right? So they may have Ethereum 2.0, they may implement some roll-ups, they may implement some protocols to make it better, faster, quicker, cheaper. Until that happens, they're going to have these huge competitors coming up, and really people like you saying, "Hey, look, we're sick and tired of paying $300 for a transaction. I'd rather pay $5. I'd rather pay 10 cents. I'd rather pay 10." And as you guys continue to do this thing, you're just going to make Ethereum either A, be more competitive and actually come up with better ways to become more efficient, or you're going to eliminate it. It's going to be the Sears. It's going to be the Kmart of your generation. Yes, actually, we serve and.
I have a question about, so I think from the beginning, there's something about tax.
Correct, yeah.
So what's like the tax for what, like, you get the whole from the transaction, how long what's the purpose of tax?
Good question. So Hoge has a 2% tax, so it's deflationary. So there will be more Hoge today There'll be never more Hoge tomorrow than there is today. Hoge currently sits at about 403 billion. Original supply is 1 trillion. There's a 2% tax. That 2%, portion that goes to a burn wallet where we destroy that token forever. It's bye-bye, right? So far, that's 593 billion. The other portion is given back to you guys. Depending on what size or amount of Hoge you have, you get free Hoge in your pocket. You hold it on a decentralized exchange wallet, such as Coinbase wallet, MetaMask, Trust Wallet, XDeFi, one of those wallets. Treasure, Nano. Actually, sorry, I need first thing.
So, how long it's gonna take for Hoge Finance to get listed in other crypto apps? Because as far as now I can see it's only on Gate.io and Whitebit.
Yeah, so we're on Gate.io, Whitebit, big one, a couple of smaller changes listed as well. We're in talks with everybody. We put in about 20 different applications to the top 20 exchanges, just that are on CoinMarketCap, right? But there's international changes too, ones that are in India, ones that are in China, ones that are in Korea. We're applying for them all. And so the idea is we're saying Hoge everywhere. We want to be anywhere that's easily accessible to anybody. Now, currently, decentralized exchanges are accessible to anybody. Anybody from any country can own Hoge by using a decentralized exchange. But, okay.
Yeah, you were saying about one of the examples where the stock price goes up like Marvel very quickly and then suddenly falls down. And I guess that was one similar incident happened more than 2 weeks ago with Shiba. It went out like 150% and dropped down by minus 50% somewhere.
Yeah. So altcoins, they live and die off of the hype, right? The reason why Shiba went up was because people thought it was going to be on Robinhood, right?
And I'm the victim of it.
You're the victim, yeah. Sadly, there's a lot more victims than there are heroes. Typically, when you have hype with a meme coin, people look at that number of 0.000 whatever and think to a penny. What if we get on Robinhood? What if we get on Legal? What if we get on fill in the blank? And why are those important, right? Robinhood provides a platform that people who don't invest in crypto can buy crypto from. So for them, it's like, oh, I can buy crypto on this platform that's available to 100 million people. Or 2% of people are currently using crypto. When you're on a platform that has quite a bit of people and they're already willing to invest, it helps bring your product more mainstream. And so people thought Robinhood bought us. And so that hype drove them up even higher. The thing that can hurt you as well, though, is a lot of the wallets within SHIB are really heavy wallets. Those people can take the price in a second. They can sell $1 billion worth of SHIB, and all of a sudden the price tanks. Now, it's good for people who believe in the project because they can buy the dip, they can go back up. And that results in a flatter wallet distribution for everybody. And what happened to Hoge over time. Yeah.
Oh, forgot my question.
Great question, sorry.
Can you tell us about some threats to Hoge, like some weaknesses or like?
Yeah. A couple of threats currently is Ethereum. While we're paired with Ethereum, the price of Hoge is heavily invested with Ethereum in our liquidity pools. The price of Ethereum goes up, the price of Hoge goes up naturally. But acquiring Hoge on Ethereum is the threat for us because if you're only buying $100 worth of Hoge, but it costs you $300 in gas to buy it, are you going to buy it? Probably not. So we combat that, right? We bridge other blockchains. We're on Matic, we're on XDAI, we're on BSC, we're on Phantom. So now you can buy Hoge for a penny, right? You can buy 10 cents worth of Hoge if you want to. That's kind of how we do that. Another threat is other tokens. There's tokens that may say we're the new Hoge, we're Hoge 2.0, we're Hoge 3.0. We're different because we do this or do that. You know, any community, any person could be a threat to Hoge, right? Any person with a better idea, better implementation, better community could be a threat.
So, you guys are volunteers who may not know or want to answer this question. Given the fact that you know about code and supply and do you have any sort of price target in mind?
Everybody says a penny, but to me, I think it doesn't matter. When we're developing a project, none of us think about the price. Right? Because the price today, I'm not planning to sell a Hoge tomorrow. I'm not planning to sell a Hoge next week. I'm not planning to sell a Hoge 3 months from now. Right? For me, the price of Hoge is when we accomplish something. I want to build a Hoge university where anybody here can look into what is the liquidity pool and find the answer. Where they can look into what is the term for fiat and find the answer. Joseph over here wants to build a satellite. He wants to put a satellite into space. Right? For him, he doesn't care about the price of Hoge. He wants to build a project for the community. You know, students. He's helping raise scholarship funds to get these students money so they can build the satellite and send it into space with NASA. Right? Recon wants to, or Zach wants to start a project for Nfc Marketplaces. He wants you guys to be the owners of your content and not OpenSea, not Wearable, not these other places. He wants you to be able to curate your own content, sell your content, and make as much money as you can from it. Simple. We want to revolutionize the way we're doing crypto, right? Because crypto needs to belong to you guys, not us, right? We're a community token where the community receives no funds at all to buy, sell, or transfer tokens. So we care about the experience. right? We don't care about the tax. We care about you guys being able to do what you want with our cryptocurrency.
So where would you say is the best place to purchase Hoge? Because I tried to do it on MetaMask, for example. I tried to buy a couple $100 worth and see that there's like $400 in gas fees.
Yeah.
And it's like,
Can you YouTube something for me?
Yeah, definitely.
Can you just type in how to buy Hoge on BSC? So there's a couple of videos. I'll show you on YouTube, step by step. To me personally, the best way, the easiest way to buy Hoge currently is through BSC, Pancake Swap.
Does the Reddit work?
You can use that too, yeah. And there's gonna be step by step. So if you look down, there should be some steps.
Welcome. In this video, we will go.
So you can watch this entire step. It shows you how to make a wallet, how to buy BNB, how to actually proceed with buying Hoge. My advice to you guys, if you want to buy Hoge, buy it over small chunks on BSC, bring it over Ethereum via the bridge, and then when you start getting redistribution. But before I continue, I do want to invite Hayden up here to speak. I think he's our last speaker, and then if you all have to go, I don't understand, but we'll be around for questions and stuff as well. Hayden, come on up, buddy.
Presentation two, Hayden.
What's up?
Do you have a presentation two, or are you just gonna speak?
No. These guys are incredible. First of all, give it up for these two right here. Look, I just kind of wanted to frame it up. I know that we've sat through a long presentation here today, and it's a lot of information to take in for the first time, but it sounds like there's a lot of people in here that see the logical writing on the wall or the blockchain, whatever it might be. And you just want to frame, I just want to frame up a couple of things to consider, because college was the best time of my life, right? And I miss it. It was a fun time, and I probably wasted a lot of my time there, right? Not my wife, but whatever, neither here nor there. The point is, right, we can all get caught up in classes and things, and education that, is tried and true and has been around for a while. And, you go through life, there's not one right or wrong way, right? But there's many ways. And when you look at blockchain and where everything's at, you have 8% adoption. You have this technology that's immutable. It's a public ledger, meaning you can track everything. 100 years ago, people were physically mining for gold in the Wild Wild West. 100 years plus later, we're digitally mining for gold, right? When we talk about the assets of history and in our society, right? What do we have now here in America, right? Gold. Well, the official story there is, right, wait, we think 2 Olympic-sized swimming pools left on planet Earth. Elon says, hey, there's a bunch on asteroids out there, you can mine it. This is gold, the store of value that we all base the dollar off, right? Then you have stocks, right? In the stock markets, shares get diluted all the time. Things can happen. Citadel can put pressure on Robinhood to hit the pause button, because these billionaires that are so out of touch with reality have no idea what a social media platform can do and can unite an entire globe at $5 and $10 increments. But you're playing in that rigged system because they hit pause, you're screwed. Then you got the dollar, right? The almighty dollar that the entire globe has been, getting out of all the US dollar-backed investments, but we don't see that on the headlines every day. It's just more about what's new on Netflix and have this purse and be so cool. They have the dollar, but they also have the money printer, right? The more money you print, more commodities go up. Doesn't really affect people in college here now, right? But the people that are in industry and in business, supply chain, right? It's starting to hit. Get to the grocery store, sooner or later, everyone's like, what's going on here? And you have this blockchain here that for 12 years, we're way past the proof of concept. Still only, whether it's 2% or less than 8%, there's barely any adoption for something that is so logical and being ingrained in every facet of our life today. That's opportunity, right? And right now, people just read headlines. Like, none of us are up here to tell you to buy Hoge or get into crypto, but think for yourself. That's what college is about, right? You learn, you think for yourself, you grow up, you get to make your own decisions. And if you base things in fact, and you go and you look below the headlines, you see how inevitable and how impossible it is to put this technology back in the bag. You got MasterCard, PayPal, Visa, Venmo, right? It's all quietly happening. NFTs, right? They just started. That's an immutable record. You talk about title fraud, scalping tickets, airplane tickets, not just like these beautiful stores of value or digital art. We barely scratched the surface. And while you're here in college, you're learning everything, take the time to demystify blockchain. It's only going to pick up more and more. And every day, you can all say goodbye to the bank, right? Can go on blockchain. You want a savings account, you go to Wells Fargo, up 0.002%. It's a joke. A stable coin, a safe place in a volatile market like blockchain exists, many different kinds. Hop on the Anchor protocol, 19.5%, dollar for dollar. Compare that to good old Wells Fargo, much less anywhere else. Collateralized loans, you used to have to go to the bank, right? To go get your house, get your loan, pay your mortgage payment. Now you got Alchemix, no risk of impermanent loss. These are loans that get paid back over time using the asset you put up as collateral to pay itself back. Go buy your house without a mortgage payment. I mean, it's out there today. You got staking, you guys like stocks and dividends and getting that, interest. And my grandfather gets his bank stocks, right? I mean, you have Hoge, right? You get your yield there. You have these other staking liquidity pools. You can be your own little Robinhood now. You don't have to be an accredited investor. You don't have to have all these assets. And I'm not going to run off, but the point is, there's generational stabilizing opportunities at everyone's fingertips that is in here today. Of course, I love Hoge and Hoge is inevitable, but the point is, you got to figure it out. No one else is. It's a lazy mindset. This is the time where you can experiment in an industry that's barely been around for 12 years. There's no thought leaders. There's no go-to-market acumen. Hell, there's no regulation and law. They just lumped it in through an infrastructure bill. They got 2 years to figure that out, but there's something here. You just take a step back and you see what everybody's doing. You think for yourself. And in this moment right here, you say, forget it, one night. Instead of like watching what's next on Netflix, read that Reddit article, watch that video. I changed my life, right? 6 years ago. And I didn't have anyone. I didn't have any speeches. I would have loved it. I soak up knowledge, right? I made every mistake in the book. I learned the hard way. Every mistake you can make. 6 years of Reddit, Twitch, Discord, figuring it out, sending to the wrong address. Oh my God, name it, right? But through that, you figure it out. We're still early. You can fail invisibly. It's part of the process. So I just want to say, take the time, as you have here, right, to invest your time into learning this. Take it a step further. This is just the beginning. And over the next decade, as the stock market inevitably becomes tokenized, right? It's a foregone conclusion the way that corporations are run today. Take advantage of it. Be the proactive thinkers in a reactive society, and you never know what could happen. So thanks a lot for your time today. You guys have questions, we're all here.
We have some free glasses, we have some business cards you can pass out, keep whatever you want. If you want to grab one, you can. If you have questions, let's stay around for a little bit. So let me meet you guys.
I'm gonna take like 3 of these.
Have yourself, take a check.
Take a stack, even better.
Really, like, totally redefined the paradigm I had. And yeah, I don't think I can. Like a moment, final, I think.
That's what it is. That's why they joke around the red pill. Right?
Exactly. Definitely red pill. Red pill speech. What's this?
Oh yeah, it's business cards.
As far as
Isn't that funny? Yeah, it's awesome. I'm gonna get one.
They also have, can I get a shot? Yeah, I took a stack. They also have metal ones somewhere. Metal? Sick, look at this. Metal business cards?
Oh yeah, I got one. Right
Yeah. I don't know if it's metal, if it's plastic, but it's sick.
Doge, bro. Doge? Oh yeah.
Yeah, if you want Doge, different story.
No, definitely.
I mean, you missed the big jump. You missed the biggest one.
Yeah, exactly. Yo,
I'm just gonna
We'll talk about it as we get.
yes, and then I'm big size. Yeah, like I don't know public. Yeah, like yeah, they had that Travis Scott thing. They were and they're selling it.
You don't think it's me, this person, like, pass them out.
LYP, and also you got the YALA.
See, the reason
There's like one new liquidity in Reddit.
They wanted to think.
See you.
So they did this.
Oh, that's so hard. I am so hard. That and
That was a lot.
they shared the PowerPoint with you.
Oh, why is this still recording? What the fuck?